Good afternoon, traders and investors. Will back here with another one, coming to it a Monday market recap, guys. Hope all of you had a very good day and a very beautiful weekend as well. And in today's markets, guys, well, we had a very stable and smooth day for a change, right? It's been a very stark contrast in relation to a lot of the volatility that we've had over the last month and a half of trading. We need some slow days like this, guys, in the mix, right? But all in all, the bulls still do retain full control of these markets, and there are still a number of opportunities to be had. So in today's video, guys, what we're going to take a look at real quick is going to be number one, a full technical analysis rundown of our major market indexes. Thereafter, a major technical analysis rundown of all of our big tech names as well. See where a lot of the indexes stand after these rallies towards all-time highs, and also see whether or not we still have some very good deals in the form of some big tech names out there, or whether or not we should kind of focus our activities more towards the defensive sectors that have really been running away with the gains so far, talking about healthcare, consumer defensives, utilities, and possibly real estate as well. So after that, guys, we're going to take a brief look into my portfolio for a few of the trades that I started off this week with. So without further ado, guys, let's jump right into the video. So SPY up a nice little 0.25%, and the QQQ up a very tiny little 0.12%. But all in all, guys, the market was relatively broad today, and I can't complain with today's price action. So take a look at the heat map right here. You will see that for the most part, a lot of the damage in the markets was just big tech having a little bit of a pullback. Big tech has been performing very well over the last 2 weeks as we've had this continuation of the recovery rally, but the rest of the market as well has had a very good day, making up for some of these losses right there. Semiconductors as a whole, very, very mixed, guys, right? A lot of names were green, but a lot of names were red as well. Very mixed sector as a whole. Financials here, not having the worst day, but the best performers once again are Visa and MasterCard. Your banks still struggling a little bit after those rate cut announcements. Now, moving into healthcare as well, very mixed day for healthcare. Healthcare has been a sector that was outperforming in the month of August especially, and early September, but has kind of slowed it down a little bit over the past 2 weeks. I'm still very, very bullish on the sector as a whole leading into the end of the year, and especially in a rate cut environment or a recessionary environment as well. Healthcare known to be one of your outperformers in the midst of those recessionary narratives. The real winners of the day, guys, has to go to the bottom half of the market right here. A lot of your interest rate sensitive sectors as a whole, such as industrials, real estate, utilities coming alive today as well. Even some consumer cyclical names doing fairly well too, and consumer defensives as well continue to outperform. So all in all, guys, very healthy market rotation if I had to say so myself. In terms of your one-day relative performance, guys, you can see that even better, most of everything in the market was green today, led to the upside by consumer cyclical and energy, and to the downside, we did have communication services and healthcare. Communication services really led to the downside by Google's underperformance over the course of the day, but that's okay. Google's been having a very nice rally over the past 7-8 days of trading, so a little bit of a pullback is definitely a welcome and healthy thing. So moving into more technicals, guys, right? In terms of what we're looking at for this week, in terms of the SPY and the QQQs, well, we're obviously above a lot of our levels here on the SPY to begin with. So SPY well above your all-time highs and trying to establish some form of support at the prior all-time highs, which were resistance. Now, can these markets potentially run further this week? Well, we don't have any real big macro data that could stand in the way of that. We do have a lot of Fed speakers, as we saw today. 3 Federal Reserve members kind of coming out and giving their opinions on the direction of interest rates. And for the most part, a lot of them do seem to be pleased with the initial 50 basis point cut and do also recognize a need to kind of have an accelerated path of rate cuts rather than more of a slower one. And I do expect that narrative to kind of continue later on in the week, especially into the Thursday session where we get more comments from not only Jerome Powell, but Fed member William, Fed member Barr, and Fed member Kashkari as well, who spoke today too. Now, the big data releases of the week, guys, are definitely going to fall on the Thursday event, which is going to be your final GDP number for Q2. We've gotten this number before, guys. It's already out there. This is just the revised and final output of that. Expectations are for 3%. I do not expect there to be much change because it is a revised number. And on Friday, guys, we do get the PCE inflation report, and that should signal, especially after what Jerome Powell told us last week, should be signaling a continued downtrend in inflation. So I'm not expecting any nasty surprises there. So all in all, the markets should have a relatively smooth sailing week in terms of macro data. So there really isn't much in terms of bearish catalyst events to kind of derail this market right now. So moving into the technicals real quick, we can see the SPY has mustered up a very nice daily uptrend, setting the daily higher lows just on the Friday session, and now looking to continue into a new daily uptrend leg. So keep in mind, guys, level to watch right now is definitely the Friday low, 565.52. If we were to lose that without setting a new all-time high, that would be a daily downtrend, and that would be a little bit of motion for some consolidation on the weekly, right? We know the weekly is now in a gorgeous weekly uptrend, so any little bit of a pullback here on a daily, if we lose this daily uptrend, that would just be for a very healthy weekly higher low trying to be established. In the event we do lose this big area, the yellow line, which is currently support below us, right? I do think the next area we could challenge again is this tiny little green box that you can barely see. I'll zoom into it, don't worry, which also lines up with the weekly 12 EMA right around there, around the 554. This was the level that we were kind of talking about prior to that rate cut event for a larger form pullback. So I do think that could be an area where the bulls mount up a lot more defense in the event we start curling over on the weekly before maybe establishing a new pivot point and potentially rallying a little bit higher. So no red flags on the SPY just yet, guys. The bulls control every single time frame. Full control of your monthly time frame, full control of the weekly time frame at this point, and still full control of the daily, which is why I say no red flags, at least on the technical aspect of the market. Moving into the QQQs right now, QQQs not looking too bad either, 0.12% to the upside, and breaking out nicely out of this massive tightening wedge pattern. So usually when we get a bullish break like this, it does lead to at least a bit of continuation, and that's what the bulls are trying to muster in terms of the price action right now. So in terms of the daily price action here, guys, daily uptrend is nice. Looking for the daily higher low right now. I wouldn't be so confident in saying the daily higher low is set just because we don't have a clear resumption of the hourly uptrend to the upside. So in the event we continue falling right here, the daily higher lows are actually right about here. 470. Keep a close watch on this level. All of your short-term moving averages are sitting there as well, and it is the downward sloping portion of that tightening wedge cycle right there. So this area right here, a huge area of confluence. This is the one that I'll be looking for the bulls to defend in the event we get a little bit of weakness from here, looking for them to establish some support around the 475 down to about 472 level and give us a nice little breakout, retest, and possibly run. Why do we have a bullish leaning bias here, guys? Well, it has to be because the bulls also control the higher time frames. Obviously well in control of the 1 month time frame too, and in control of the weekly time frame, which just now established a brand new weekly uptrend with the close of last week's candle. So that's why we say, guys, most of these dip opportunities are going to be for further potential daily legs higher. So that is the kind of price action that I'm looking for, especially in terms of buying dips, right? Any large dips on big tech companies, I will be looking to play either with call debit spreads or potentially with short puts, the usual strategy that we use on the channel as part of the larger wheel strategy, right? So QQ's not looking too bad, all things considered. Moving on to financials right now, financials definitely underperforming them and healthcare, right? But we know that financials did a great job of carrying the markets when they really needed it the most. So for them to kind of consolidate here at the all-time highs is not so much of a bad thing. Keep in mind as well, guys, beautiful engulfing move right here, right? So daily downtrend was underway, big engulfing move by the bulls. What are we looking for right now, guys? Looking for a daily higher low to be established before a potential continuation of a daily uptrend higher. Why do we have the bullish bias once again? Because the bulls control all the higher time frames, guys. Beautiful weekly uptrend right now. Weekly higher low was set just a few short weeks ago, and now we are simply looking for a bit more continuation to the upside. At the worst case, guys, I would not be opposed to a little bit of tightening up here of this range, and just sideways consolidation could be the best case scenario for the bulls in the event they're just not able to break out higher over the course of this week. I still do like a lot of financial names right now. The one that I'm keeping a very, very, very close eye on is going to be Berkshire. If Berkshire makes its way back in roughly the 446 down to about 437 level, this area right here could be a beautiful breakout and retest trade on the monthly here, guys, for some potential further continuation to the upside. The weekly is also looking quite good too, so I would not be opposed to making a play on Berkshire as a whole. It is the one that I'm eyeing the most closely on financials. Moving into healthcare right now, healthcare also down a little bit today, 0.57%, and healthcare, unfortunately, guys, has just been steadily pulling back, right? Really trapped in this tightening range at the all-time highs, and it has been that way virtually at this point for almost a month, right? 23rd of August is right here, and we haven't really developed much in terms of price action. So that being said, the bulls are still in control. We are still looking for a daily higher low. Anything pretty much above this guy right here, 152.80, looking for that daily higher low for potential further continuation of the daily uptrend higher. However, in the event we start rolling over on healthcare, setting up for the daily downtrend, that is perfectly fine. We'll just be looking for a little bit of weekly consolidation. We know the bulls did a great job of controlling this weekly uptrend this entire time. And even if we get a break of this guy right here, 152.84 to the downside, that would be weekly downtrend, yes. But on the longer term timeframes, guys, that would just be looking for a little bit of monthly consolidation. You can see here that the bulls control the entire monthly time frame right now. It's been 4 months of straight up, so a little bit of a pullback here throughout the months of September and maybe early October would not be the worst thing for these healthcare stocks. And I will be a buyer in the event we do find some more weakness in these. Just a few of the names that I'm looking at right now, guys. UNH, I've brought this one up a lot on the channel recently. Look at the monthly. If we get a monthly retest down here, 550 down to about 527, I'm going to be looking to pick that low, going for the retest and possibly run on that one. And another one that's kind of caught my eye recently has been Johnson & Johnson. Johnson & Johnson pulling off the breakout retest on the smaller timeframes on the weekly specifically, right? Beautiful weekly rally right here. If we start retesting this lower range, 161 to around 158, gonna look pretty good, guys, especially for a monthly higher low. If healthcare does keep being a little bit weak right now, looking for the monthly higher lows and possibly some trend expansion here into the later part of 2024. So those are the two names that I kind of have my eye on right now. Moving on to SMH, semiconductors. Semiconductors still doing a whole lot of nothing. We know what the bulls are trying to do, however, right? They're trying to go for the daily uptrend expansion, but they're just not getting much momentum at the current time, are they? Now, moving forward, guys, we do have a nice area of support below us that we just kind of broke out of. That is 238 down to about 225, but you really don't want to lose this guy right here, 230.57. If you lose that guy right there, you lose the entire daily uptrend. And unfortunately, at that point, guys, your weekly lower highs are set, and we kind of look to the furtherance of maybe this tightening range that I've been talking about, right? That is one of the key scenarios for SMH right now that I've been noticing here. We may just get trapped in somewhat of a tightening range. We know there's been a lot of growth concerns around the semiconductor trade, and we know that it is a cyclical business, guys. This quarter specifically, especially due to company guidance that we've gotten over the last 2 quarters, is said to be a little bit weak before picking up steam in late Q4 and especially in 2025. So this would be a perfect time for these markets to kind of consolidate into some form of a tightening range. But tightening ranges can be played too, guys. How do we play tightening ranges? You guys guessed it, with some short puts, which is why I keep looking for quick drops on semiconductor names such as AMD, such as NVIDIA, right? So I can write short puts under the market and really start playing this consolidation period in SMH a bit more aggressively. Now, keep in mind, the bulls haven't lost anything yet. So if we do get some further continuation of this daily uptrend, keep in mind your resistance above us, 248 up to about 255 is going to be the next target, where I do believe the bulls get a little bit of, get a little bit stopped out in their momentum here before maybe pulling off a little bit of weekly retracement to the downside. So keep your eye on those levels. Last Wednesday's low, crucial to maintain the daily uptrend. And obviously, if we start breaking higher, keep an eye on this big level of resistance above. Now, taking a look briefly at our other sectors right here, you can see that consumer defensives still remain one of your hottest plays in the market right now. We may be in line for some further weekly consolidation, but at the worst, I'm probably expecting just a tap of the 12 EMA, this yellow line right here. Look how well this chart has maintained the 12 EMA, guys, ever since November of 2023. So that's kind of what I'm expecting. Weekly higher low and possible further trend continuation. Utilities is largely the same. Utilities has been performing excessively well, especially since your rate cuts have just started right now. So any dips, in my opinion, for utilities, probably just looking for the daily higher lows for further trend continuation. This sector was muted for such a long time, guys, especially after the 2022 drops. Didn't get much price appreciation. Now, just recently in the past couple of weeks, we've been blasting through the all-time highs, and I expect this bullishness to really continue, which is why I really love playing these sectors that are in favor right now. Now, moving into IWM Russell. So the Russell a little bit weak today with the rest of some of your tech names, right? So moving into the Russell, 0.37% to the downside, but the bulls have tons of space, right? Beautiful engulfing move, looking for a daily higher low for potentially another rally forward to start attacking some of your larger resistance levels, which start around here, guys. This is really the big level that we're trying to get our way through right now. 233 down to about 216. We're kind of in the bottom end of this range right now, and it's going to be very, very tough for the bulls to break through that unless they get a massive green light from the economy that we're not going into either a hard landing recession or even possibly a soft landing recession too, right? We need the green light from the economy for the risk on assets to really start running. Just the rate cuts alone are probably not going to get it done. We need some very bullish data out of the economy to really dispel any fears of a recession if you really want this trade to start flying. As of now, just looking for some consolidation. So we'll see how this price action plays out, guys. But it's one thing's for sure. The bulls looking very, very good. A lot of space for that daily higher low for some potential trend continuation. Personally, myself, guys, I'm going to be only interested in the Russell. If we break back down around 215 to around 210, that will be an area that I'd be looking for a potential swing trade here, guys, for a weekly higher low and then go for the continuation of the weekly uptrend. Lastly, moving into the Dow Jones not looking too bad either, 0.15% to the upside. And what is the Dow Jones looking to do? Well, not only are they breaking through to new all-time highs today, but eventually we will need some consolidation here, guys. So as soon as we do start getting that consolidation, just understand we're just looking for a daily higher low for possible further trend continuation, and there's tons of support below us. Not only is the 12 EMA right here at about 41,500, but we have this massive area that we just previously broke out of, right? That should be acting as some very decent support, and you can see that even best expressed on the weekly, right? Full weekly control by your bulls right now. So any weekly dip, in my humble opinion, is going to be a buying opportunity, especially around this level right here. You can see the nice confluence, 41,400 down to about 41,000. Confluence with the 12 EMA, this yellow line right here. As a matter of fact, let me make these 12 EMAs a little bit more aggressive or a little bit more visible. There, you can see it, right? Beautiful confluence right there. So that's the trade that I'm going to be looking for, guys. I don't often play the Dow Jones, but in this current market environment with a lot of uncertainty, a lot of recession narratives, right? The Dow Jones is probably going to be a sector that outperforms. So I will be looking to make any plays on some dips back here into our juicy level of confluence. And that pretty much wraps it up here for our indexes. Let's move into a little bit of crypto today. Just going to cover Bitcoin as a whole. So Bitcoin not looking too bad, right? We know Bitcoin's been on a beautiful daily uptrend march right now and potentially looking for a little bit of consolidation. If we do get that consolidation, guys, I will be looking to buy the dips, more specifically around the $60,500 level. Why? Well, because not only is it a great level to retest our prior resistance right here, which will now be support, but look at all of these moving averages, which will be confluence too. So I do believe we have a good opportunity here for a breakout, retest of the level, and potentially run a little bit further. On the weekly is looking great too. Nice engulfing move on the weekly by the bulls. So stands to argue, in the event we lose this daily uptrend and even blast this level right here with a daily downtrend, the bulls do have a lot of space right now, guys, to kind of switch it up, right? Looking for the weekly higher low for a possible weekly trend breakout. And this would be a big one, guys. We have not had a confirmed weekly uptrend on Bitcoin in a very long time. As a matter of fact, since this massive leg right here in the month of March. Since then, it's literally just been a series of consecutive weekly downtrends. So if you do get a trend shift, it will be very notable to us, and we will be looking to capitalize on that move. So that's my thoughts on Bitcoin. I am going to be a buyer down here. And in the event we start retesting even lower here, guys, right? Lower again, once coming back into the 58 to 55, and we do not get the breakout, this area down here still represents an amazing buy opportunity for long-term Bitcoin buyers, in my humble opinion. Moving on to our big tech names right now, shall we? So moving into Apple. Apple not doing the worst today, but also obviously red, 0.76% to the downside. We know Apple had a tremendous rally last week, but we also understand too, they have a lot of concerns over revenue growth in the future. We know that the iPhone 16 pre-sale numbers are very weak, especially in relation to the iPhone 15 numbers that we're comparing to for last year. So is it going to be the massive upgrade cycle with Apple AI technology that everybody's looking forward to? Well, I have a little bit of my concerns in terms of those facts, right? So we'll keep a very close eye on Apple right now, but this one is definitely not my favorite play in the market currently, to say the least, right? I have nothing against the company, but Apple does have its challenges ahead of it right now. So moving on to the technical analysis, guys. The bulls are trying for the daily trend reversal. Daily downtrend was right there, big engulfing move. Now we're going to try to look for the daily higher lows for a potential recapture of the daily uptrend. So what you'd need to see if you're an Apple bull right now is we need to hold the lower end of this support zone right there, around 223, 222. All of the moving averages are acting as confluence as well. So looking for a daily higher low for potential daily trend continuation. But be careful, in the event the bulls give back too much of this move, well, the bears have an opportunity, guys, to capitalize, reverse this into the daily downtrend, and send us into a little bit further weekly consolidation as well. As you can see, double top on the weekly, we do not have the weekly confirmed uptrend that Apple was looking for. Unfortunately, they gave it all back last Friday, really resulting in this double top scenario right now. So I will be very patient on Apple, guys. I am actually looking for the breakdown of this trade on the weekly, right? I do have my long-term Apple shares. This is true, but if we're looking to swing trade this one, I have to get a lot better pricing, guys. The valuation is sky high right now, and with the revenue growth concerns, I'm going to be looking to get the best prices possible, and the best price for me has to be down here, 205 down to about 195, this little pocket retesting the prior all-time highs, guys. Up here with all the concerns Apple has right now, just not the best risk to reward scenario in terms of swing trades, in my humble opinion. Moving into AMD. So AMD performing decently today, right? 0.51%, but we know where AMD is right now. They are struggling in this whole area of resistance, the big red box. 155 to 163. It's been a very challenging area for AMD pretty much this entire year, right? We used it as support after we blasted through it in January, and then it kind of became a very big area of contention the whole time since then. So AMD is looking to kind of get the breakout going from this zone, looking pretty good right now, right? Nice daily uptrend formation. So we'll be looking to continue this move higher. In the event the move tops out, going to be looking for a daily higher low. At this point, anything above 147, going to be looking for that daily higher low for potential further trend continuation. However, in the event we get rejected from here and start giving it all back and roll over into the daily downtrend, similar to what happened right there, well, just understand, guys, the weekly bulls are looking primed right now, right? So looking not too bad. They didn't quite secure the weekly uptrend first, but any push higher this week will give them that weekly uptrend. In the event they fail, however, we are just going to be looking for a weekly higher low, anything above 133, weekly higher low, and possibly just tighten up this range down here, guys, before making a second attempt, or rather third attempt at this resistance zone. The way I like playing AMD has been the same way I like playing AMD, guys, in the last 3, 4, 5 months of trading. I'm going to be looking for short puts, writing puts under the market significantly. So in the event we dip back down here under 150, I'll be looking once again for short puts in the lower $140 range. That is how I'm going to be playing AMD specifically. Now let's move on to Amazon. And before we do that, give me a very brief second. Amazon, really one of your outperformers today, 1.19% to the upside, and finally getting through this 190 area that's been plaguing the stock, right? It's been resistance for a lot of different times over the course of the year so far, and now finally getting through it in a very decent way. So obviously, beautiful daily uptrend on Amazon right now. As soon as this move tops out, how do you know when a move is topped out, guys? Look for the loss of the hourly time frame. When you lose the hourly time frame in a significant fashion, you'll probably lose the 12 EMA in a significant fashion as well, and you know daily consolidation is underway. At that point, guys, going to be looking for a pullback, anything above 183.21, looking for the daily higher low for possible further trend continuation. Now that Amazon is above the 190, guys, they will be able to use that whole, well, you know, even though it's one line, it's more so of a range, right? Roughly the 190 to about 187 range. Now that we're above it, could be a nice candidate, guys, for a breakout, retest trade, and possibly run. So if Amazon revisits this 189, 187 range, I could be tempted to make a little bit of a swing trade right now, but Amazon has done an absolutely amazing job, guys, of recapturing all of the damage that was done, culminating in the Black Monday sell-off event. They've almost all taken it back. So tremendous rally by this company, guys. And I think this is going to be one of Amazon's best years ever in terms of profitability, in terms of free cash flow, and just in terms of all the metrics that shareholders are really looking for. Beautiful weekly trend expansion too. So looking for that to continue, guys. I will be a buyer of Amazon on any retest of the high 180s. Moving into Google right now. So Google down, of course, on the day 0.95%, but it was not always so. In the morning, they were actually nicely green by about 0.5%, and then unfortunately, top to bottom, we kind of unraveled 2.15%, but that's kind of normal, guys. We're running into this whole area of resistance, that starts around 166 all the way up to about 170. So keep that in mind. Google's had a very tremendous run so far, but could just be some time for a pullback, but that's okay. We are waiting for Google to have a little bit of a pullback so that we can possibly enter the trade again. Keep in mind, daily downtrend was underway on Google, big engulfing move. Now we're looking for the daily higher low, right? So step number 1 is complete by the bulls, big engulfing move. Now we need the daily uptrend to be confirmed. So looking for the daily higher low and daily uptrend confirmation, guys. So I'll be looking down here. 160 to about 157 is going to be an area that I'll be looking to play Google, either with some short puts or possibly even some call options as well. We are looking for Google to kind of make up for lost time and lost ground, trying to reset into a new weekly uptrend, which is why I'll be looking for that weekly higher low, looking to buy this one for a potential weekly leg rally into the higher area of resistance, 172 up to 180. I think it's a very easy trade for us to take just because of the valuation right now, right? The valuation of Google is extremely cheap. The company is doing very, very fine right now. They've just been kind of bogged down and in the mud because of obviously all of the lawsuit headlines that is facing Google right now. It reminds me exactly of where Apple was just a few short months ago when they were getting hit with all the bad news down in this area. I was saying it was a great buying opportunity, and the rest is history. A few other companies that had similar news was Visa and MasterCard with their lawsuits, right? Getting bogged down for a tremendous amount of time back here. I was saying it was a great buying opportunity, and the rest is kind of history. And we're looking for Google to do pretty much the same thing, which is why I say I'm going to be looking to buy this daily higher low for possible daily trend expansion and possible weekly trend expansion as well. Moving into Meta right now. Meta, one of your bigger winners of the day, guys. Brand new all-time high. Again, 575. Looking extremely good on Meta. Finally breaking out of the infamous all-time high that they struggled with for all intents and purposes since the month of March, right? And now we got to be looking out for the following trade on Meta, guys. We know daily downtrend was underway, big engulfing move by the bulls. So now we're going to be looking for the retest, guys, right? So in the event this move tops out soon, keep in mind daily overbought conditions right now. So in the event Meta has temporarily topped, keep an eye, guys, on the loss of the hourly time frame. As you can see, they have respected this 12 EMA very, very well since embarking on this journey beyond the all-time highs, and they've also not lost the hourly time frame. Lose the hourly time frame and the 12 EMA, you know that daily consolidation is underway. At that point, we're going to be looking for a daily higher low for possible further trend continuation. So target the peaks right here. This is going to be your first line of defense, right? 542 is going to be the initial area, and also confluence with the 12 EMA that's curling into it right now. However, in the event that the bulls are not able to get it done and continue this weekly daily rally into the 600s, let's say they roll over into a daily downtrend, guys. In my opinion, that is best case scenario for the trade that I'm looking for. More specifically, we're looking, guys, for the breakout, retest, and run. I'll be looking for this retest range, guys, 542 down back into our support range. So essentially right here, right? 542 down to about 530, 525. If we can retest this sweet spot of price action right there, I'll be looking to make a juicy trade on Meta for some trade continuation, just because they control the weekly in such a beautiful fashion. And the breakout, retest, and run trade, guys, is one of my favorite trades in the market. So keep an eye on Meta for that specific price action scenario. Moving into Microsoft right now, Microsoft down about 0.42%, but really muted day for Microsoft. What are they trying to do? They're trying to protect this area that we just broke out of to the upside, right? We know it's been a big area of congestion for Microsoft in the past, and this time is no different. So keep in mind, what are we trying to do right now? Big engulfing move by the bulls, looking. Well, now they might just lose the daily uptrend, right? If we break last Wednesday's low, this would be a failed new high into lower low, daily downtrend for the bears. And at that point, we'll be looking for a little bit of weekly consolidation. But we understand the Microsoft bulls on the weekly have the space for it, guys, which is why I say anything above 400 at this point, looking for a weekly higher low for possible further trend continuation. So where am I looking to play this one specifically, guys? Down here, just a little bit lower is what I need from Microsoft, down to about 425. If we can pull back into 425, maybe loading up some call options with about 3 months worth of time on them, probably debit spreads, because I like doing debit spreads in this market a little bit more because we have so much uncertainty ahead of us, right? But all in all, the technical pattern is looking very good. No red flags for Microsoft. The bulls are in control of the monthly. They're in control of the weekly right now. It's just the daily that's showing a little bit signs of weakness. But if we come down here, guys, 425, lower end of this whole range of support, right? And also moving averages as confluence. Moving into Netflix right now. So Netflix still struggling with the all-time highs, guys. It cannot get it done. This reminds me of Meta, right? Struggling with this level right here, around the $700, $715 level. That's the area that Netflix continues struggling to break out of, but that's okay, guys. The bulls are not showing any signs of weakness right now. It's just kind of pausing the all-time high rallies. Take a look at this, right? We're barely beyond the previous all-time highs, but that's okay. We are in the midst of a gorgeous monthly bull run right now. And in terms of the weekly as well, the weekly is not looking too bad, guys. Nice little weekly uptrend too. Now, I do acknowledge that Netflix is slightly weak up here, but I wouldn't say that the bears are taking control, right? There's no red flags. We're just kind of a bit range bound right now on the Netflix chart. So that being said, we are above a very decent area of support right now, and that is about 700 down to about 676, right? The area that the bulls have struggled to break out of, well, we can now use that as support below us. So looking for the bulls to set up possibly either a tightening range and breakout, or even if they do set up some daily higher lows down here, looking for the trend expansion later on, maybe in the month of September or early October as well. No red flags at all, guys. The red flags would only start if we lose these weekly levels right here, 663, but that is still a ways away. If anything, looking for a weekly higher low in this zone of support and possible trend continuation. So nothing wrong with Netflix right now. A little bit tough for me to position here in the short term. One thing's for sure though, if we start revisiting these lower levels down here, guys, 660-ish, that is where I'll be a buyer on Netflix, looking to pick the weekly higher lows for some possible trend continuation. Now moving on to NVIDIA. So NVIDIA has not done anything in the last week and a half of trading. Now we're used to NVIDIA pulling off these massive moves either way, right? So to see it kind of consolidate sideways and do nothing, we really haven't had this type of price action either since this area right here leading into earnings, or this kind of section back here in the early parts of June, right? But that is to be expected, guys. We know that semiconductors have not been in favor right now. Where is all that semiconductor money going, guys? It's going to the rotation, the defensive rotation in the market that's been at play here for the past month and a half, 2 months of trading. You can see NVIDIA has not done anything since pretty much the month of, well, it rallied here in June, and but since pretty much July, since we've been having a kind of growth scare in the market and a little bit of a tech pullback, semiconductors as a whole have not done anything. And I do expect that to continue probably through September and October, at least until we make our way through those Q3 earnings. That being said, NVIDIA also has not lost any major ground either, right? We are still trapped in this overhead range of resistance, talking about 120 all the way down to roughly 115. They're keeping it very, very, very tight. So whichever way this breaks, guys, we're going to get some confirmation for the higher time frames. Break above 120, perfect. You have a new daily uptrend established, and we're going to be looking to attack the higher 130s. However, break it to the downside, guys. Daily downtrend is underway, and that will be significant on the weekly too, guys. This looks exactly like SMH. As I've been saying, possible likely outcome for semiconductors, guys, is just continued range-bound price action. No defined trend right now. It reminds me exactly of what we were going through last fall as well. So the way that we can play kind of this timidness and this sideways action in semiconductors as a whole is the strategy that I like best running on the channel, which is writing short puts. So in the event NVIDIA has a big day of red coming up Tuesday or Wednesday, 3-4% to the downside, I'll be looking to write some short puts, guys, 106, 105, as low as I can get into this big area of support, right? And that's going to be just the way that I'm looking to play this volatility. Very tough for any directional plays to the upside or to the downside. We can see how muted these markets have been. So I would rather just play the volatility by selling options. So price action, very, very tough right now. Wait for the break on NVIDIA either way. Moving into Tesla right now. Tesla definitely the big winner of the day. So Tesla up a whopping 5% and really coming into the area that we were kind of planning for on the channel, right? We knew that in the event Tesla bulls were able to break out out of this range of resistance right here, they were probably going to go all the way for the gap fill right here at around the 246 level, even into the 250 range, which is exactly where they're attacking right now. Upcoming catalyst for Tesla has to be the deliveries that are coming out next Tuesday, 1st of the month of October. And then, of course, they have earnings in the midpoint of October and the robo-taxi event as well. So a lot of action coming for Tesla over the next month of trading. That being said, price action looks good, especially since they are one of the beneficiaries of these most recent rate cuts, right? So daily uptrend is very healthy right now. Any pullback going to be looking for a daily higher low. At this point, anything above 225 looking for the daily higher low for a potential daily uptrend continuation run in Tesla right now. Not looking too bad at all, if I do say so myself. On the weekly also looking very good in terms of weekly expansion. Weekly uptrend is confirmed, of course. Now we're going to be looking for some resistance, guys, coming above us at around the 255, 260. So be on the watch, guys. In my opinion, this Tesla trade is kind of coming to an end. Keep in mind, we have deliveries coming up only next week, and then we come into the robo-taxi event and into earnings as well. So no trade for me on Tesla right now, especially not coming into these large areas of resistance. I'm more of the opinion of waiting for a little bit of a retest, guys. If we somehow get a back test of this level, I could be interested in playing Tesla for some speculative continuation into the level right now. But right now, we're kind of in between, guys. It's just too tight, right? Overhead resistance is very close, and the support range also is very close. We're kind of exactly in the middle point between these two ranges. But all in all, Tesla does look good right now for the bulls. So looking for that continued trend expansion into the 255, 260 level. And now lastly, Palantir. So Palantir doing what Palantir does best, which is giving us continuation gains every single day, apparently, right? So looking very good on Palantir, coming into the last area of defense right now, which is overhead resistance, about 38 to 39. You can see it. It's the last level from 2021. So keep that in mind, guys. Not much price action beyond that. So keep in mind as well, though, guys, that Palantir's valuation right now is excessively high. And I am a Palantir bull, just as a lot of you people are on the channel as well. But this valuation right now is excessively high. I didn't do it at $38. If you guys want me to do it at 38 bucks, let's do it together on the channel right now. Their forward EPS, I don't think has changed. Let me just pull it up right now, because doing continuously showing the PEG ratio at 32 is a little bit rich. A lot of analyst price targets now. Well, this guy has no idea what he's talking about at $9. But a lot of analysts right now are kind of pulling back on the stock's expectations just because the valuation is getting a little bit crazy here, guys. So your forward EPS has come up a little bit, about 35%. So considering the fact that we have a 35 EPS right there, so let's take in consideration the price right now. Let's call it about 38, right? 38 divided by 0.35 is literally a 109 PE ratio, which at a first glance is very, very high, but we divide it by the EPS growth rate, which is about 26% per year. It gives us a 4.17 PEG, guys. Anything above 2 starts to be relatively high. 4.17, guys, I cannot buy this at all. We're taking in consideration, guys, the EPS growth rate through 2027. So if you're thinking, well, I'm not considering future growth, I'm considering the next 3 years of future growth, as a matter of fact, and it's still way too high for me. So that being said, coming into resistance right now, we're going to be eventually looking for here, guys, is a loss of the daily uptrend at this point, right? Daily higher lows are set 35.78. So in the event we get rejected right here and then come back and engulf this to the downside, could be a setup for a daily downtrend and a little bit of much needed weekly consolidation, guys, on this one. That is the trade that I'm going to be looking for myself. Beautiful weekly uptrend. I acknowledge that, right? Beautiful weekly uptrend, but eventually all good things come to an end. We're going to be looking for the weekly pullback. And when that happens, I will be ready down here around the $32, $31 level is where I like picking up this stock. So looking for just a weekly higher low for an entry opportunity for us, and then possibly a second attack at the $38, $39 level. But sometimes when these stocks go in favor with heavy momentum, guys, sometimes the valuation can stay ridiculous for a very long time, right? I'm not taking that away. I'm a Palantir bull. I have a ton of shares that I bought all the way down here, and I'm happy to still be holding them. But that's what this stock is for me right now. It's not a buy. It's not a sell. It is still a hold. So that is pretty much everything that I had for you guys in terms of today's video, in terms of our stock analysis. Now let's run through a few positions that I have open for the week. So Today, we didn't go very heavy. There weren't that many opportunities for some short put options, but I'll be keeping a close eye tomorrow, guys. I need a big red day in the markets to really unlock a lot of these short put opportunities for now. So as you can see, not much will have changed in the portfolio, as a matter of fact, since the last time we went over this together. A few new additions right now are going to be Colgate-Palmolive took a bull call debit spread, the January 105s versus the 110s. I wanted the Decembers, but they really didn't have any. We picked them up over the course of the early morning today. And that's going to pull up crude, isn't it? For sure. No, it's going to pull up Colgate. Nice. So Colgate, all that we're looking for, guys, is simply a weekly uptrend continuation. So looking to play it from this level right here, touch of the 50-day EMA, has been very, very, very good support for the stock, leading all the way since the rally started in last October. So looking for a play there, and it's very, very simple, guys. We can keep a very tight stop loss as well. The weekly higher lows are right here. If we lose those, it invalidates the entire trade. So we can keep a relatively tight stop loss. If not, we're just looking for that trend expansion. Thereafter, guys, the only other trades that I added over the course of the day today, well, number one, before I forget, is going to be NVO. So these NVOs, you might remember that I had them. I put them on place about a few weeks ago at this point in time, right? We put them, I'll show you guys exactly where we put them on. We put them on this candle right about here. So now it's been a few weeks and now it's kind of unraveled in front of us right now, down again about 3% today, but coming into good support. The reason that I added to this position today is we're simply looking for a monthly higher low for possible further trend continuation, and we're coming into the 12 EMA right now. So we know that this stock has been excessively bullish over the past let's call it a year and a half, and we're really looking for that to continue. Healthcare overall has been relatively weak over the past week or two, so I wouldn't be too nervous about this trade. If I want to add to this position, guys, I'm adding where it counts the most in our level of big support right now. So now we have 4 contracts, November 140 versus the 145s, looking for a little bit of reversal here and a recapture of the levels, moving into possibly the 130 and 140 range. And the only other trade that I took today was SoFi. So we wanted some SoFi $7.50 puts for next week. So we were able to get at, just under 1%. We got filled at 8 cents, but obviously minus the commission, we end up with 7 cents. This is for next Friday. So 2-week trade, almost 1%, roughly 0.5% a week. Really happy with SoFi, guys. I keep telling you guys, I want to be a buyer at SoFi at the $7.50 range. You guys can see I used to have some SoFi shares. We got called away from them last week, made some decent money on those, even though it was a small position. So now it's time to do it all again. If we get assigned SoFi, you guys know the drill. Just gonna be looking to run some covered calls or hold the shares for a little bit of weekly trend expansion. Those are the only ones. We still maintain all of the hedges, the SQQQs, and all of the TLT positions. As a matter of fact, I actually got assigned some TLT shares at $99 last week. We got about 22 cents in premium. So our average cost right now should be sitting about 98.78-ish. And then, of course, we wrote some covered calls today when TLT came back to the $99 level. Let me just pull it up for you guys so you can see what I'm talking about. So when TLT today manifested a little bit of a rally here early on in the morning, when it came back to 99, well, that is when we wrote some covered calls and we got about 56 cents for them. So looking very, very good, guys, in terms of TLT. Our average cost on these TLT shares is now significantly lower than our entry point, and we do still maintain all of these juicy call options, guys, for different varying strikes and expiries, right? So those are just the massive hedge play that I'm looking to take. Sorry guys, I forgot. The other one that I put on is waste management. I've been talking about this one a lot on the channel. We put on 2 contracts right here, $3.95 each for the 210 versus the 220 January bull call debit spreads. Once again, there was no December, so it was either November, which is 55 days away expiry, or the Januaries. I went with the longer expiry, which I always do. Waste management looking to just play off of the support zone, looking to attack the higher end of the range. I'm really trying to attack the 215, 220 for a little bit of trend expansion. So nice little trade setup right there. I've been talking about it for a while. If we retested this zone of support, we took it early in the morning, and so far, so good. Waste management kind of moving in our direction since we took that trade. That's pretty much the only updates. I'll be looking to close out a lot of these trades all throughout the month of September, guys. And you'll see starting in the month of October, we're going to really cut down on the amount of positions and go back to what we were doing in 2023 and early 2024 before I started showing a lot of these smaller account strategies. We're going to take larger concentrated positions and a lot fewer positions as well, and continuously run the wheel strategy, right? So I ran a lot of smaller account strategies over the last quarter as promised to you guys, just to show you that there is a lot of different option strategies, whether you want to go with some long form options, meaning like you want to pay for options, right? Buying options. The call debit spreads, guys, are very, very easy and powerful strategies to build a small account. We also did a lot of put credit spreads. I don't do them so much anymore, but for about a month and a half ago, we were doing a lot of put credit strategies, which is an easy way to replicate what I do with larger short puts, except you're using spreads. So as you can see, guys, it doesn't need to all be about large positions for small accounts, right? You can use smaller account strategies to build up an account with stable and consistent trades. That's what I always focus on, guys. Consistency and discipline, right? It serves no purpose going for home runs if you lose 9 out of 10 trades and then hit one big one, right? You're not building good discipline and good consistency. I would rather do the opposite. Go for base hits, not home runs, guys. Go for high win rate probability trades. Build up your consistency, build up your confidence. That way you can scale up these strategies and increase the size of the positions, right? So you'll see myself trimming down a lot of these positions moving forward into the early portion of October. And then we'll probably only be running with about, anywhere between 5 to 10 different trades at a given time, rather than all of these trades at the same time. All of these trades take no time to manage, by the way, right? You see there's so many trades right here, but they're all using weekly time frame setups, guys. I don't need to monitor these trades more than once or twice per day. You can even look at them only once per day in the morning and get a general idea of what's happening, guys. None of these are day trades. They are all contracts with a long duration of expiry on them, or simply wheel trades, right? So it's very easy to keep track of them, very, very passive as a whole. So even though you might see a lot of positions, they don't require any active management whatsoever. So hopefully that is a good explanation for you guys. But so far, it's been a good month of September despite all the volatility. So that's pretty much everything I had for you guys for the video. Just giving you as many trade ideas as possible as usual here, guys. So hopefully you appreciate all those different trade ideas. And as you've been seeing, a lot of the options that I've been throwing in the account recently have been in the more defensive sectors, healthcare plays, consumer defensive plays, consumer staples, right? Or utilities or real estate plays. I'm staying away from a lot more of your more volatile growth names and any of the tech names that are not the Magnificent Seven, right? I'm really staying focused on the defensive part of the market right now. So hopefully you guys enjoyed today's video. If you did, consider dropping a like. Would really appreciate it for the growth of the channel. Second, if you haven't subscribed to the channel, consider doing so. If you're new here, I would love to see you back in one of our future videos. And lastly, guys, if you have any questions at all, always feel free to leave them down below in the comments. Anything you want. If you want me to look at a specific stock, or if you want me to do some technical analysis, or if you want a second opinion on an options trade, anything like that, feel free to leave it down below in the comment section, and I usually get back to you within the first 24 hours. Now, guys, in terms of the final message for the video, I will not be here Tuesday, Wednesday, and Thursday. I have a business trip coming up where I have to go to New York for 3 days. And trust me, if I had the time during it's not really a vacation, but if I had the time during the trip to film some aftermarket videos on my laptop, I would do so. But I really have some very full days for that short time span. So unfortunately, I will not be able to film very much. But I will see you guys for the Friday market update, and then we'll do a couple of videos on the weekend, such as some top 10 stocks to buy and stuff like that, because we haven't done them in a while, guys. So I won't be seeing you much before Friday, but always feel free, if you have any questions throughout the week, of course, you can reach out to me in the comment section down below, or if you want more personalized interactions with me, or my live, or my live trades, or private morning live streams as well, you can always feel free to click the link down below in the description and join our private Discord, where we have a lot of fun and discuss trading and ideal setups and everything like that throughout throughout the entire day. And I will be in the Discord, of course, over the next 3 days too. So that being said, guys, that's all I had for you guys today. Take care. Love you guys. See you in the next one, and peace.